All right, folks, back to work tonight. Boy, big day coming tomorrow, right? FOMC tomorrow afternoon, and we have one of my all-time favorite chart patterns setting up tonight. I call them slingshot reversals. I get a beautiful slingshot setting up the NASDAQ, the S&P as well. If we're lucky tomorrow, we'll nail that slingshot before the FOMC announcement. We'll talk about why I love this pattern tonight, how to profit from this pattern tonight. So what might be the most important video of the week, because FOMC, slingshot reversal, that smells like some great money to make on Wednesday morning. So charts are ready. Enough of the intro. As always, thanks for tuning in and watching our videos. Let's dive in. Let's make some moolah on FOMC Wednesday. S&P SPY ready to go tonight. NASDAQ triple Qs are ready. I have 5 clues on these charts telling me where I think the money is made tomorrow morning. The first clue is right here on the hourly time frame. I like to use the hourly charts as an overall directional filter. It's pretty easy to see right now, right? The buyers are in full control. Clue number 1, our directional bias for tomorrow is clearly bullish on the S&P and the NASDAQ. Clue number 2 is in the calendar for tomorrow. You probably know this already, but tomorrow is not your average Wednesday. One of the most anticipated FOMC announcements of the year. Everyone expects to get a rate cut tomorrow, right? The market's kind of guaranteeing at least a 0.25% rate cut, but will they cut by 0.5% tomorrow? Personally, I think they've waited too long. I think they need to cut by 0.5%, but we'll see if Jay Powell agrees with me on that. I also think too that this big run up we've seen the last couple days here, it might be another one of those buy the rumor, sell the news events. We saw one of those back on non-farm payrolls a couple Fridays ago. So don't be surprised tomorrow afternoon if we get a 0.5-point rate cut. We get what we want. But the markets have been going higher the last couple days here. They may have already priced that in. We may see a sell-off even if we do get the number that we all want tomorrow afternoon. So will tomorrow be a 0.5-point rate cut? Will this be a sell the news, buy the rumor? We're going to find out tomorrow afternoon. Final thing too is, remember, anything after noon on an FOMC day, got to be careful getting to that noon hour Eastern time tomorrow morning. We'll talk about that tomorrow morning in our trade room. Let's get back to our charts though, because we all know about the FOMC tomorrow. I got a couple more clues here on some tick charts. The hourly chart is good for direction, but the tick charts are used for timing entries because tick charts make the entry patterns a whole lot easier to see. And by the way, if you're tuning in for the first time right now, that is a 7,000 tick chart. All the time frames there, upper left-hand corner. That is the 1225 contract we recently did roll over here on the E-mini S&P and the NASDAQ. And don't forget the only indicator we need, don't overcomplicate this stuff. It is the 21 EMA. We use that every day in our trade room. There are 3 more important clues right now on this tick chart. One clue, strong run going higher. Now, why is a strong run higher a big clue? Because anytime we see a strong move in one direction, we expect a pullback and a retest of that level. Strong move higher says we know where the buyers want to go. They want to go back and retest that 96 3/4. We'll cover NASDAQ in a moment. Very similar tonight on the NASDAQ as well. Second clue in tick charts. 4th clue overall is this bearish range. Now, you know by now, if you watch these videos, you know what do ranges do? They love to rotate down, up, down, up, right? We use things like triangles. We use things like symmetry, right? The amount above, the amount below, right? Ranges, they love to rotate. And because we are an overall bullish market on the hourly time frame, we are more likely now to rotate and break out of that range through the top of that trading range. And the final clue, one of my favorite clues for tomorrow, are the previous ranges. We have a range down below us. Remember, anytime we see a range breakout, what happens, right? Breakout, pullback. Love, love, love that breakout pullback zone down below. And then don't forget, there's a little tiny range right there that is also a breakout pullback zone right there. This could be a great spot for a bull trap. And really, that breakout pullback zone could unlock what I call a slingshot reversal. I talked about this earlier in the video. What is a slingshot reversal? It's very simple. Whenever I have a bullish market overall and I see a bearish trading range, we know that ranges love to rotate. A slingshot reversal is a run below that range and a rotate and a slingshot back up above the range as it rotates higher, as it resumes the overall bullish trend. This slingshot, this reversal of momentum, this range rotation off the low can produce some incredible moves here. So we'll talk about that slingshot reversal because it lines up perfectly with that breakout pullback zone. One thing though, FOMC days, they love to grind higher. They love to float higher. So I want to talk about it a bit later tonight. We'll talk about if we don't get that slingshot. I've got 3 ways I'm going to trade this if we do make a run going higher, because you might have noticed before, a lot of FOMC days, they do grind higher before the J-Pow announcement at 2:30 tomorrow afternoon. Let's talk about the slingshot though, because the slingshot really is, again, it's one of my all-time favorite trades here. Look at that pendulum swing, by the way. That rotation, that range, the amount above, the amount below, that level, all the area down there. I would love to get a run going lower, maybe at the top of that channel I got drawn on there right now. I would love to get a run going lower and get a bear trap down here, right? I'm not going to pick a bottom on this, right? Picking bottoms is a risky game, right? I'd rather wait for it to pull back. Let the bears try once, let them try twice, and then use that bear trap technique I teach in our free video course. Think about this. All those sellers, their stops are sitting right there. I can punch right into those stop losses. If you're short and you get stopped out, what happens? You buy your way out, right? Easy bear trap off that range. And again, we know what's the market want to do. It wants to rotate off the low, off the high, and eventually go back and take out that big high up overhead. If we know that now as the market begins to rotate now, this is so important too in a slingshot move like this, is you want to find an add-on. Now, add-on trades are simple. What you want to do is look for a shallow pullback that barely misses that moving average. Then, off the highs, higher high in price, and we're adding on right below that low. In our trade room, we call this a bear trap, 2-try bear trap, and an add-on trade. And again, because this range wants to rotate, we know exactly where the market wants to go. We know we'll leave that runner back to that retest the high. That's a very attractive trade for us here tomorrow morning. But here's a question though. What if we don't get that bear trap down there? I would not be surprised tomorrow if we complete that pendulum swing going lower. Nice strong run going down, but we don't get a bear trap down there. It just whoop and runs right back up again. Remember, if we V bottom off the low, it almost always begins to grind going higher. When that happens, draw a trend line off the highs. Bring that trend line down around that low and repeat after me. First test is the best test. I want to get that buy off the first touch of low of that channel, and if we're lucky, it'd be right below one of those swings. This could be a bear trap, like I'm showing you here, a seller failure pattern, a strength trade going higher. Any of the entry tactics you guys are learning in the free video course can easily be applied there on that V bottom reversal. Now, I want to cover a few more variations of this slingshot move because it could be one of our biggest winners of the week. Before we do that though, if you're tuning in and watching for the first time right now, this might be a brand new strategy. It is a bit more advanced here on this YouTube channel. I know a lot of you guys watching right now, you guys know these patterns. You're making money with these already. But if you're watching for the first time right now, this might be a brand new strategy. Don't you worry though. I teach this entire roadmap. I teach all of these entry tactics in a whole lot more detail in my free video course. What I'll do is I'll put a link up top here for you. Upper right hand corner, hit that link that popped up there and take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that literally tells us exactly where to find the winning trades each day. It is remarkably simple. More importantly though, let's face it, We make our money by timing good entries, don't we? So in that video course, I'm going to teach you my 4 favorite entry setups so you can time better entries, get your confidence back, get your consistency back in your trading. Guys, if you're still missing the best entries right now, if you lost your confidence in your current strategy, don't delay. Hit that link that popped up there. Watch that free trading course. Everyone loves all the trade examples I include in that short video series. The best part is it's completely free for you. Also, too, folks, be aware too, I'm going to put all the important links below this video in the description of the YouTube video. Start first with that free video course. Most folks start making money all on their own, all from that free video class. So start there first, get your confidence back, get timing better entries. That link is below. And don't forget too, we trade together every morning in our trade room. I'll put membership information, trade room links down there for you as well. Come trade with us tomorrow morning at 8 o'clock Eastern time. If you're on Twitter, if you're on X, I post a ton of charts and videos during the day. My X handle's down there. Give me a follow. Again, all the details you'll need to learn more, hopefully earn a lot more, are below the description of this YouTube video. All right, where did we leave off here right now? Okay, I talked about running lower, trapping bears in, squeezing stops. That is the classic slingshot reversal as you rotate off the low of this trading range. We also mentioned too, if we saw a V bottom, right? V bottoms tell us to go find that channel and don't miss the first test is the best test, ideally below a prior swing. One more thing here. You'll notice below here that measured move. Remember, tomorrow we have a big news event tomorrow. We may be in store for some big volatility tomorrow. Measured moves out of a trading range. You need to learn this technique. But bottom line is, when I see a range breakout, the size of the breakout leg can be used as a measuring leg. Okay, that is the basic principle how ranges work. When they break out, the size of the breakout leg, right, can be used as a measuring leg. We saw one back here, right? There's your breakout, there's your measuring leg, right? It's very similar, very symmetrical as it breaks out of a trading range. So let's say, for example, now we see a strong run down. We may get that bear trap down here, right? Bears once, bears twice. We may get a nice quick first target, but instead of running all the way back up and slingshotting higher right now, we may make another leg going lower. Now again, you know this now, right? You know that the breakout leg is the measuring leg. You know what that means. That is a key area of support. So if we get what I call a retest trade, we break out, bear trap, and you'll learn this in the free video course. I always take a quick first target, 1-to-1, get that stop moved up to my point of entry, remove the risk. I never want a green trade turn against me into a red trade. So on these ones, I oftentimes will get a stop out right at point of entry there at my trailing stop, and we make another leg going lower. Now to a rookie, this will feel like a reversal, but we know this isn't, right? Because look at the hourly time frame. The hourly chart is so bullish overall. This is nothing more than a breakout leg, measured leg. So this area right here will feel like a spot to be a seller, but you know more now. You know too much now. This is a horrible spot to be selling. Again, think about that pendulum swing off the high, right? All that support waiting down below us here. So if this is a horrible spot to be a seller, it's a great place for, you guessed it, a bear trap. It almost always will do this: pop up, run back lower, and do it again. Bears once, bears twice. Remember, always a higher high in price, always a higher high. Why? Because sellers want to sell high. Trap them in. Don't just pick those bottoms. Don't blindly buy there. Wait until they're committed. That we can buy right into their pain, right? Stop those bears out, squeeze those stops. And I'm telling you right now, if there's one thing you learn from this, after a bear trap starts working for you, once those bears get squeezed, you start seeing this thing separate away from that moving average. Remember, separation equals strength, and strength means another leg coming here soon. Again, we call these retest trades. All it is it's a breakout, it's a retest, it's a measured move. Anything below that low, anything below low in that measured move area, that's our money zone, bear trap, add on. And remember, we're overall bullish. The buyers want to go where? Back to retest the high. So leave a runner, right? Leave a runner. Love, love, love those retest trades. Now, I do want to talk about if we go higher here. Because again, it's very common for the FOMC day to grind higher in one direction. I'll talk about that in a moment. Speaking of grinding, right? What if we, again, tomorrow's FOMC. You have to think there's going to be some shenanigans tomorrow. There will be some weird price action before the number comes out tomorrow afternoon. We may grind higher, but what if we grind lower? What if we grind lower? So one thing about grinding markets are very tough to stop. So before we see big news, I always kind of mentally prepare for a grinding market. Now, grinding markets. The problem with grinding markets, well, for example, there's a very big difference between a strong rundown. You know, we always say in our trade room, the best trades are always scary. They're almost always scary, right? So we slam down lower. Think about this. All the moving averages will still be up here, right? I can use a bear trap down here and basically bridge that gap between the 21 and say the 50, the 200 moving average, right? There's profit to make in the distance between the bear trap and the moving averages up around that trading range, okay? If I see a strong rundown, I can profit from that distance, okay? If it grinds down though, slowly grinds down like this, what happens is it drags all the faster moving averages, all the longer term moving averages, it drags everything down with it. Now, I don't have all that profit to make between a bear trap and that moving average, right? That's the biggest problem when it comes to grinding markets. When it comes to grinding markets, you must remember that grinding markets are very tough to stop. And most of the time, they're gonna break above a prior swing, retest that low, and then resume the overall trend. So write this down. Grinding markets are stronger than normal, right? They don't seem very strong, but they're stronger than normal. They almost always will go above a prior high, retest that low, and then go. So if I see a grinding market going lower, my plan will be twofold. If it grinds down, I need to be very careful here not to be buying too high. If it grinds down, I'm going to use a slight variation of that bear trap. We call these crown reversal patterns. I want to buy below a prior swing. Very, very important. Buy below a prior swing. Why? Because if I buy as we're going higher, who's waiting up there? Bears are. To do what? To run this thing back down to retest the low. Now, once we get the retest is the best one, right? The best one's the retest. Now they got what they want. Now the sellers who sold up here, they're taking their profit down at these lows. Again, a retest trade. Think about that measured move trade I mentioned earlier. Same thing. I can be a hell of a lot more aggressive on the retest trade. Trap the bears in, squeeze those stops. This is a very typical scenario when a market grinds against us. And I say against us because we're an overall bullish market. But again, if it grinds down, remember this, if it slowly grinds down, it drags all those moving averages down with it. Expect this thing to pop up, get whacked back down again, and then pick it up on the retest. Knowing that, I'll be trying to get in as low as I possibly can, right? And I will take a very quick first target, remove that risk. We'll do it together tomorrow morning in the morning room, because as we get above these highs here, I got to be careful. They whack it back down again. Now again, if they get the retest now it's mission accomplished. Now we can trade the retest trade, right? It's a 2-try bear trap like I teach in the free video course. It's an add-on with that separation. And at this point now, again, let that sucker run and squeeze those stops going higher here. So a bit more advanced game plan if we grind down. But again, tomorrow is FOMC, so I want to make sure we are mentally and technically ready for no matter what this market throws at us. Okay, that's my S&P chart, and that is our slingshot reversal off of that low. Remember, it's a bullish market, bear range. They love to rotate, and we slingshot up off of that low. Love, 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 love that pattern in our trade room. But let's talk NASDAQ though. NASDAQ, again, I mentioned earlier, oftentimes markets will grind higher into the FOMC announcement. Step one, obviously, we're bullish here overall. You don't need me to tell you this right now, right? We're pretty obviously a bull market here right now on the NASDAQ. But before we dive into the tick charts though, and talk about the price going higher here, if you're enjoying tonight's video, please help me grow this channel, will ya? By hitting that like button and make sure you subscribe. I know we're all busy people these days. I appreciate you all watching my videos. So as always, thank you, thank you, thank you for the likes, the subs, all the support I feel in the comment section below. Now I promise I'm done begging for likes and subs here. It's YouTube. I know they maybe do this stuff on YouTube videos, don't they? Over our tick charts though. Tick charts, again, are based on volume. They make entry timing a hell of a lot easier. What do you see right now on this tick chart? I see a very strong run going higher. Now, why is it important? Because we see a strong run. Anytime we see a strong move, expect a pullback and a retest of that high. What else do you see right now? Bearish range. This is the recipe for a slingshot. It's a bullish move up, bearish move into a range right now. Think about how ranges work. If we go lower and then rotate back higher again, this thing's going to snap, right? It's going to slingshot. It's going to rotate off that low, the amount below, the amount above, and punch that ticket back at that high. Do you also see this range down here? That range right there is getting lonely down there, right? It's getting lonely down there. Now remember, tomorrow might be a buy the rumor, sell the news environment. This whole move higher might be buying the rumor, right? But once J Powell says, and let's hope he does, please, please, J Powell, you waited too long. It's going to right the ship right now. Give us that half point rate cut. Anyways, we might get that half point rate cut tomorrow. Do not be surprised, though, if what seems to be a good news report winds up being sold off. What I love about this chart, though, is this is the prior all-time high right back there, right? If we do get a really big correction tomorrow, it'll probably go all the way back, that prior range, that prior all-time high, right? Prior all-time high, breakout, pullback. So again, do not be surprised here if we see a buy the rumor, sell the news environment tomorrow with a big crack going lower here. And one thing you'll notice here are these this little tiny range here up above us. Not the most important thing in the world, but what do you think? Is it possible that we might go up and crack running lower? Definitely, right? Definitely, definitely. Okay, so let's break this down right now. I talked earlier about the slingshot move, right? Running lower, trapping the bears in, squeezing back higher, the measured move technique I mentioned earlier. All of the same stuff on the S&P can be applied literally turnkey here on the S&P. Love the area down below us there, right? So same stuff we mentioned earlier on the S&P can apply here, the NASDAQ. What you better be prepared for though is that breakout pullback zone right there. If we run up and get cracked back down again, remember, this is not a full-blown reversal, right? Look at the hourly chart. Look at the hourly chart. It will take a lot more, right? There's the previous all-time high right there, right? It will take a lot more than a pullback right now to reverse this thing into a bear market, right? So just be aware of that. Don't let the tick chart fool you into thinking this is a reversal. So there's a very decent chance tomorrow that we may grind up here, get into the underbelly of that range. We may get one of those crown reversal patterns, buyers once, lower low, buyers twice, above that high. Remember, these are always half-size trades in my book, right? Against trend, right? Against trend here. We call these crown reversal patterns. We talked about this in more detail last night on the video last night, right? But again, it's a breakout pullback zone of that prior range there. So be careful as we go higher here. Do not just assume we're going to keep going back up and retest the high here. If buyers get caught up here, don't be surprised if bears come in and whack that thing running back lower. Then the amount above, the amount below, we now know where to take our profit, right? Cash our paycheck there, and then let that thing pull back. Oftentimes in these situations, they will go a little bit further because everybody's getting trapped, right? But remember, This is not where I want to start selling. This is a place for a bear trap. We're pulling back nice and deep in an overall bull market. As it pulls back now, bears once, bears twice, trap them in twice. Why twice? Because I want their pain, right? Their pain is my fuel. Their pain is my profit, right? Buy right into those stop losses and squeeze those suckers going higher. And again, we know how ranges work now, right? They love to rotate. So as it runs, get that separation off the moving average. A lot of examples of those, by the way, in the free video course, right? Bear trap, add on, let that sucker run, let that rotation run. And again, same thing before, right? We may go up, we may break down, we might see a measured move down there. We'll keep an eye on that tomorrow as well. Now, if we start going higher here, I mentioned earlier that a lot of times price will grind higher here into the FOMC announcement in the afternoon. Let's talk about a breakout pullback, right? Because breakout pullbacks, if we break out of this range, we then begin to look for a breakout pullback off of that trading range, okay? Let's talk about that breakout pullback pattern right now because there's a couple ways in which we can trade this. First of all, if we start seeing separation off of that moving average, again, we'll want to get through that breakout pullback zone. We'll see separation off that moving average. What does that tell me now? It tells me now we know the market wants to go back and take it the high, right? We know that's where the market wants to go right now. So let's mark off that low and start adding to our position, right? Start building that long going higher. And by the way, these are relatively aggressive trades here. The risk reward ratio isn't that great. I take these half-size trades personally right now. What do we know about range breakouts? They love to make measured moves, right? So breakout leg, measuring leg, there is my target going up overhead. We take our profit up at the measured move. Then we look to go back to the range where we came from. That trading range right there, what was resistance, now becomes a key level of support. Most of the time, these are two-legged pullbacks. One leg, two leg. Imagine a measured move that goes a bit too far. And remember, I'm not going to blindly buy that measured move. That's a rookie mistake. I'm going to wait for price now to pull back to the moving average, trap those bears to two-try bear trap. You'll love the examples I include in that free video class I mentioned earlier, and we start adding to our winner from there. In this scenario, the buyers are trying to go where? They're trying to go back up and take out that high. If there was a dictionary for a breakout pullback, ask ChatGPT, show me a breakout pullback. ChatGPT should tell you right now, it's a separation, it's a measured move, it's a two-legged pullback, again, off what was resistance becomes support. It's a two-try bear trap, add more to the winner, and run back to the high. That is the dictionary definition of a breakout pullback. These happen over and over and over again. Now, one thing I want to remind you is, again, they love to grind here. So sometimes what happens is we'll pop up and we'll start grinding. We'll start grinding, right? We'll separate off that moving average. We're not getting anything below these swings. We're not getting entries below swings. Sometimes it grinds. Now remember, grinding trends, right? What do we know about grinding trends? They're very strong trends. They're tough to stop. So I can be more aggressive on a pop and grind move higher. Draw a trend line off the highs. Bring that trend line down around that low. Find that channel. What do I say here? Look left, find some prior swings, and don't you miss that first test is the best test. I want to get below that 21 EMA, trap those bears in once, twice, squeeze those stops. Now, on this one, how do we know where is the measured move on a pop and grind breakout? I'm glad you asked. The breakout leg is always the measuring leg, right? Okay, the breakout leg, the pop leg is the measuring leg. Once we know how deep that pullback is, now we know where that final target is. Remember, guys, if you want to make more money, hold on to your winners longer, right? Let your winners run. And once you learn this breakout leg, measured leg technique, it gets a whole lot easier to leave a final target for that runner. Want to make more money? Don't trade more often, trade bigger size, and let your winners run. The final scenario for tomorrow is popping up into a new trading range, right? Imagine this now. If we pop up into a new range tomorrow, remember now, that previous range wants to what? It wants to break out pullback. The current range wants to what? It wants to rotate, right? So these are easy, right? When I see multiple ranges like this, again, I love the idea of a slingshot with a bearish range like this, but I will not complain about a bullish range tomorrow as well. We'll use that prior range for a breakout pullback, use that bear trap technique, pull out 21 EMA, and just squeeze those stops running higher, the amount below, the amount above. Now we know where to leave that runner. Want to make more money? Get better at leaving a runner. And once you learn how range rotations work, it becomes remarkably easy with us in the morning trade room. So now we know how to trade a slingshot for tomorrow, how to trade a grinder for tomorrow, all the variations. I have no crystal ball for tomorrow, but this is why I plan my trades, and we'll trade our plan tomorrow morning in our trade room. Guys, speaking of the trade room tomorrow morning, 8 o'clock Eastern time, the best place to be is in our trade room. Guys, I can't imagine any easier way to learn and earn. Guys, I'll put all of the important links you need to learn the roadmap. Start first on that free video course. You're going to love all the trade examples there. Again, most folks start making money all on their own, all from that free video class. So start there first, get your confidence back, start making money on your own, then come join us in the trade room, 8 o'clock Eastern time each morning, and we'll do it together. In the meantime, guys, what do you think for J-Pow tomorrow? Will he wimp out and be a quarter point? Will they give us, will they give the people what they want, that half point rate cut tomorrow? We need to get this economy roaring again here, and hopefully tomorrow is the beginning of that process. Guys, hope you learned a bunch in tonight's video. Hope you use this knowledge to earn a bunch tomorrow, and hopefully I'll see you guys sometime soon trading with us in the morning room at 8 o'clock Eastern time, guys. In the meantime, be well out there, be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.